Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Thursday, July the 1st, 2010. Well, a continuation of the trend to the downside, with the market making a lower high and a lower low. The market tested the 1018 area of previous support that we highlighted on yesterday, and there was very strong upside price rejection from around that area. There's a very strong possibility of a change of trend in this market, and this type of candle is almost a Japanese candlestick reversal pattern. It's almost a hammer pattern, and with the hammer we have a small body with a shadow at least twice the length, and generally they don't have a shadow on the top. This candle has a small shadow on the top, so it's not quite a perfect hammer, but it's almost a hammer. Now, the main reason why we have it has potential to be a reversal is because of the small body, and the small body tells us that in this case, the sellers have made a very small amount of net bearish progress on the day between the open and the close, and it's not what you like to see as a trend continues on its way. It's actually what you tend to see as a trend ends. So there is a strong possibility of that, but also the lower shadow represents buyers coming in, and that's certainly not what you want to see in a downtrend. So the short-term dynamics are in favour of there being a change of trend in this market. So the high of the current candle, around 1030, 1032, becomes very important. Confirmation would be a candle with a higher high and a higher low. Now, if we do have a candle with a higher high and a higher low, obviously this area around 1041 that was previously support, and we can see here on this occasion, two occasions here, that area may actually hold up as resistance. So we do need to watch the market if it does trade up to there. If it does trade up to there, then obviously 1029 and 1018 on the way back down will offer support. Now the market is quite bearish and trading down below the cloud or the Kumo, and trading below the Tenkan-sen and Kijun-sen, so the market is bearish in all three time frames, but it is looking a little overextended. It is trading a fair way away from the Tenkan-sen and Kijun-sen, and this market looks like it needs to either pull back a bit or at least relax a bit. So the market is set up for that. Interestingly, we can see on the previous day's trading, we had a smaller body than the day before that, and that's what we tend to see as the market nears termination of a first time frame downtrend. Obviously, there is still a chance that the market will continue trending down, because if we need proof otherwise, that would be a higher high and a higher low. So there is a chance that the market will continue making lower highs and lower lows, even though the short-term dynamics don't confirm that. So we do need to watch this 1018 area again, certainly down here at the low of the current candle around 1011, 1010. Now, just looking below there, there is the next level of support is around 1,000, so that will be a very big level for this market if it does trade down to around that area. If the market does trade up above the 1041 region, then obviously the area around the Tenkan-sen and Kijun-sen, which are at the same level, will represent strong resistance. So that's around the 1070 level, and to the upside above there, certainly up around the cloud, around 1100 up to about 1110, will offer resistance. Interestingly, the Tenkan-sen and Kijun-sen for the last 3 trading days have been at exactly the same level, so we actually haven't had a crossover of the Tenkan-sen below the Kijun-sen, which is a bearish signal, and if that does happen, it would be quite a strong bearish signal. So it's quite important that the market hasn't actually given us that crossover yet, so that could tend to support the potential for the market to retrace back towards the Tenkan-sen and Kijun-sen. If the market does trade back up there, then it's likely that we'll see the Kijun-sen go flat. And if that does happen, there's a very strong chance that the market will attempt to rally back up to around 1070. So we do need to keep an eye on that. But overall, the market remains bearish in the long-term, medium and fast-term timeframes, but the short-term dynamics certainly aren't supporting the downtrend anymore. The short-term dynamics are suggesting that there is potential for a change of trend to the upside.